Good afternoon. Let's do some business. We are doing it live right here and doing more at 4 weekday afternoons. We get right down to business with a news-driven hour right after Ben Shapiro. And just before the 790 KBC News Blitz with Randy Wang at 5, Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at KBC.com and your on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Quite a roller coaster on Wall Street this week. Stocks rallying today as the Dow led the major averages higher for a fourth week of gains. The Dow coming in for a closing gain today of 654 points at the closing bell. Had been up around 800 during the trading day. The S&P 500 moved up 60 points, and the NASDAQ ended the day up 176 points. Stocks seeing gains today after the latest reading on inflation caused some optimism that the Fed might cut interest rates as soon as September. For the week, we see the Dow was up 0.7% and just racked up its longest winning streak since May. The S&P 500 saw its weekly losses, and amid a slump in big tech stocks, the NASDAQ also retreating. The S&P 500 down 0.8%, while the NASDAQ dropped 2.1% for the week. Each of those major averages seeing back-to-back weekly declines. We did see the bond market move on the latest signs of slowing inflation, with the yield on the 10-year note back down to 4.20%. That's the one that impacts the fixed-rate mortgage rates, which are hovering below 7% now. Shares of the big tech stocks did move higher today, but down for the week. We saw Meta, Microsoft leading the gains in the big tech area. And let's see, 3M. Don't often talk about 3M. Turned out to be the best performing stock today in both the S&P 500 and the Dow Jones Industrial Average. It was good, 3M, after the company beat earnings expectations for the second quarter. Shares of 3M soared about 19% today, moving up, up more than $23, almost $24 higher to $127.16. The price of gold moved up today, but did post a second weekly decline after the precious metal got caught up in a broad drop in risk assets after climbing last week to fresh record highs. We see gold settling up $32.80 to trade at $2,386.30 an ounce, and silver moving up today 9 cents higher to $28.07. Well, that breeze you're feeling out there could be the winds of change in real estate. Big drop in real estate sales here in Southern California noted. Is it a collapse, crumble, or a crash? That question was put to Jonathan Lansner in his latest column. That's the headline in his latest column in the Orange County Register. I'll talk about what's going on in real estate locally with the one and only Jonathan Lansner, business columnist at the OC Register. Governor Newsom making news this week on his announcement that he wants to remove homeless encampments across California after a U.S. Supreme Court decision allowing cities to enforce no camping laws. Business people are saying it's about time, but what will this decree really mean, and where will the homeless go now? I'll discuss all that with SOLEDAD URSUA, Venice Neighborhood Council board member, will be live with me later this hour. But first, to wrap up this volatile week on Wall Street, joining me live now, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Big Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thank you very much for taking the call and stepping up to the plate after this wild week here.
Yeah, Frank, great to be with you. And I have to tell you, this week reminded me very much of the 1972 song by the Brady Bunch Kids entitled Time to Change. You might remember that one. When it's time to change, you've got to rearrange who you are and what you want to be. And I'm not going to sing it, but we really saw a changing of the guard this week. I mean, big cap stocks down about 5%, small cap stocks up about 8%. So it was a really just total changing of the guard this week in terms of what we've seen in previous months.
I love it that you like the Brady Bunch. Me too. So we have another thing in common here, and so the winds of change are definitely blowing. The political winds of change blew this week, and geopolitical news as well. One fire hose of news after the other last couple of weeks, really. So let's take a look at the Dow. It was up about 800 points today. Up 654 at the bell here. The blue chip suddenly coming to life. Let's talk about that for a moment.
Yeah, I mean, names like AT&T, Frank, Philip Morris, you mentioned 3M. These are classic value-oriented names. These are the sleeper names. You know, they're not sexy. They're not AI. They're not coming up with new microchips. They're selling tobacco. There's a Coca-Cola was at a new 52-week high today. So, this is what, it seems to me is in terms of putting new money to work. As we always say, investing is almost like bar hopping. You really want to go where the action is. And the new money, the new bull market, if you will, is in some of these sleepy areas. Many of them are in the Dow, as you said. So that's really kind of where the money's going. And it's coming out of those high-tech names. NVIDIA is down 10% in just the last month. And Frank, I do think a lot of people are inclined to want to buy the dip. That's kind of human nature. We think if I love it at 50, I should love it at 40. But my 2 cents is avoid that inclination to buy the dip, because I do think what we're seeing here is something more substantial. These out-of-favor names like value, like small cap, they're what's coming into fashion right now.
All right. I think it was you that compared stocks to sushi on this program, right? You don't want to bargain when you see it discounted.
Yeah, and that's a great point. I think of a stock like Oracle, wonderful company, but, Oracle traded at, as memory serves me, something like $50 a share in 2000, and then took about 10 or 12 years to get back to that point after the 2000 correction for technology stocks. So, my fearless prediction, Frank, is that we're seeing a period not unlike that period after 2000 where it's going to be everything other than technology that's leading the charge. And I think we've already started to see that. One of my favorite stocks right now is BTI, that's British American Tobacco. And I do think you're seeing tobacco stocks. Can you think of a more hated group, more philosophically hated? Everyone hates these companies, but they're very profitable, excess of 6% dividends. And BTI, I think, is one, you want to do your own due diligence, but it's one that I do own over at capitalspig.com, and I think it goes higher from here.
On the air live with investment expert Jonathan HOENIG. And before we get off the tech theme, what about Apple here, which, of course, hit new highs recently, still above 200 here, moved up a bit today of 47 cents, just below 218. What about good old Apple here?
Yeah, look, it's such a monster, Frank. It reminds me of that old saying they used to say, as goes the GM, so goes the country. You could almost really say that about Apple. And now it's kind of vying for that number one spot in terms of the market indices. But as you said, it was 234 was the all-time high just, in July 15th. It wasn't just, a couple of days ago. So I wouldn't bet against the company right now. But, I think if tech itself suffers, Apple's going to suffer as well. It's going to get swept up in, the rising tide and the falling tide as well. So, if we're really entering a period where other areas of the market are going to kind of prosper, I just don't think I'd be putting new money to work in Apple. Great company, but I don't think it's going to be the best place to make money moving forward.
All right. The cryptos in focus this week with these Ethereum ETFs bursting on the scene. Ethereum got a big bump on that and then pulled back. We'll be taking a closer look at the crypto prices here very shortly. But what about that? This on top of the Bitcoin ETFs, which appeared earlier this year, which helped propel Bitcoin to an all-time high.
I have to say, Frank, I've been amazed at Bitcoin's strength. I sound like an old fuddy-duddy. I don't get it. Bitcoin at this point is still used primarily for speculation in Bitcoin. Only a small percentage of transactions are actually executed in Bitcoin. But, the way to play this, and I think you started by mentioning the kind of tumultuous political winds shifting here. It just might happen that, a Trump presidency or a Trump presidency part 2 could be beneficial to Bitcoin. So the one to watch there is BITO. That's BITO. That's the ETF that tracks, by and large, Bitcoin. It's not a recommendation. You want to do your own due diligence, but it's up about 8% year to date and, up about 17% in just the last 6 months.
Right, and today up more than $2,100, up to $67,940 for the price of Bitcoin, a gain of 3%. So the cryptos, especially Bitcoin, doing what they do, very, very volatile, and certainly for folks that don't have a strong stomach, certainly not the right feeling here to endure all of that. But it's fun when it goes up. Certainly, right now I'm looking at Bitcoin up around just below 68,000 here. And right?
And I'll say, Frank, that's the thing about something that's great about an ETF like BITO is that, even if it is a risky asset or a volatile asset, as long as you only put, 1% to 2%, a reasonable position size, use a stop loss order, don't double down. It's all what I talk about in Price is Primary. Where people go wrong is not that they pick a bad stock, but they double down, they take a huge position, they make it an all or none. So if you love Bitcoin, take a shot at Bitcoin, but don't make it a do or die in case you're wrong or in case the position's too large to live with.
And it is to be noted, President Trump will be speaking tomorrow at the Bitcoin conference in Nashville, so we'll be listening for what he has to say. And, of course, we talked to the biggest fans of crypto as well as the harshest critics. We had John Najarian on this program earlier this week, who's a big crypto guy, and he may even actually be attending that conference this weekend, so we'll certainly be following that closely. Ford, one of the big losers this week. I don't know if you saw this. I'm sure you did and probably talked about it on Fox Business, and that was the biggest drop yesterday since the financial crisis in 2008 when the automakers were having some serious issues. Ford today rebounding only 3 cents to $11.19 a share. It looks like that company's losing very big money in its electric vehicle push here. What about Ford and the other automakers here?
Well, I have to tell you, Frank, I was pretty surprised about the drop in Ford because up until that news, and you're right, I mean, the fundamental news about how much money it's losing, and I believe it's particular on the EVs.
Yep.
I mean, it seems as if finally regulators are starting to realize what consumers have already understood. I mean, people are regretful from these EVs, Frank. I mean, they regret buying them. They're not interested in buying another EV. And, whether it's Hertz, which I know you reported on, and Ford down 20% in just the last 5 days. I'm not a dip buyer, but I have to tell you, if you were looking to buy a dip, I think I would consider a dip in Ford. It had been up at a new 52-week high just earlier this month. So, look, Ford had some really fundamental bad news, but you can make the argument the news is out now, so the stock's yielding over 5%, and previously it had been extraordinarily strong. So I think if you like buying dips, Ford, which, this is a dip you might consider buying for the long term.
All right, the other big news, of course.
The Rolling Stone Music Now podcast gets inside the biggest stories with Rolling Stone senior writer Brian Hyatt, Snoop Dogg, and Lotto.
Let me give you one of my secrets. I remain the biggest kid in the room at all times. There's a kid in you can't believe that. Look at where you at. Keep making it about fun.
Yeah, we blessed to be able to do a job that's like fun.
There's two funds that's the most important funds in the world. Funds that you make off of the fun that you have.
Rolling Stone Music Now, wherever you listen.
That the fallout from that CrowdStrike meltdown, the IT situation that developed a week ago and then impacted the airlines, many of them, especially Delta, all this week. CrowdStrike holding stock saw a big hit. It did rebound today, by the way, up $2 at $2.56. I know you've had your eye on that whole situation.
Yeah, I mean, CrowdStrike is it's chilling and it's also sobering just how important these large cap companies are and how intertwined they are and how dependent we are on them. And, Frank, my fearless prediction is, what you could see with CrowdStrike is very much like I remember we saw with technology stocks in 2022, as I recall. I mean, Facebook was very weak in early 2022, and the sense was, oh, this is just a Facebook issue. And then it broadened, and ultimately it was stocks, and particularly technology stocks writ large. So that's my fearless prediction, is that the CrowdStrike story is pretty embarrassing for CrowdStrike, but that's, I think, probably indicative of what we'll see is just weakness in technology writ large. I mean, it wasn't just CrowdStrike. Microsoft was down to 9 or 10% in the last month. We talked about NVIDIA and, a lot of those big tech bellwethers, great companies. But as I said, I think the winds are shifting here, and the market's moving towards things like microcaps. FDM, that's Frank, D as in David, M as in Mottek, FDM. That's an ETF that holds the tiniest of tiny stocks, the ultra small caps. So I think if I was looking to take a risk, I'd probably be looking at microcaps much more than buying a decline in NVIDIA at this point.
On the air live with JH, that is Jonathan HOENIG. And Jonathan, at this point, let me ask you the big question here, and certainly go ahead with the ticker symbols on this next question here. Where are you putting money now and or taking it off the table?
Yeah, I mean, the two areas that have been so out of favor for so long, small and value. And look, it should be always one part of a portfolio. You want to do your own due diligence and talk with an advisor. But FYT, that's Frank, Y is in yellow, T is in Timothy, FYT. It's an ETF that tracks these small cap value names. And Frank, it sounds so unsexy, as I said, compared to NVIDIA, compared to chip names that have been flying so high for so long, but the winds are shifting now. So it's very likely, in my humble belief, that a year from now, 18 months from now, we're going to be talking about the massive rally in value stocks. I think now is a great opportunity to get on board. FYT is one to consider for your portfolio.
All right. Sometimes we have to bring unsexy back, as the case may be. And any other specific places where you're taking money off the table, where are you definitely avoiding at this point?
Well, we got some news that's good for us on inflation today. I mean, the inflation data is pretty encouraging. It's still higher, but it's higher than it was. But the rate of inflation is slowing, and I did notice that natural gas prices have been extremely weak. UNG, that's the ETF that tracks the natural gas. This is an ETF that people like to trade oftentimes, Frank, but boy, it's extremely weak. So I think it probably bodes for lower energy prices, could even see lower gas prices, certainly lower natural gas prices. UNG is one I'd avoid for the near term for sure.
All right, interesting that just as we got this latest inflation reading, gold got another pop, which we're told is an inflation hedge and historically has been, of course. Gold up more than $32 today, back to $2,385.70 off its recent high, but certainly on the upside. What about gold here?
I really like gold, Frank, but you have to be patient. I mean, the last big gold bull market, roughly 2001 to 2010, it went up almost every year, but it went up 8%, then 12%, then 4%. So these were consistent, not extraordinary, but consistent gains. And I think that's where that type of environment right now. So I like a position in gold. We own it at Capitalist Pig. We've owned it for a long time, and I also like platinum. Platinum has been extremely weak, back under $1,000 an ounce. But the ETF to watch, and the one I own personally over at Capitalist Pig, as I said, is PPLT. That's an ETF that tracks that platinum. Again, one part of your portfolio, not the only part, but as you said, it's pretty surprising that even as they say inflation is going down, a lot of these precious metals are moving up once again.
Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, always fantastic to speak with you here. Thank you very much for taking the call this afternoon.
My pleasure, Frank. Have a great weekend.
You too. Thank you very much. Mottek On Money continues here, 790 KABC. Turbulent week comes to an end with a rally today. The Dow up 654 points at the closing bell, had been up about 800 during the trading day, settling at 40,589. The S&P 500 up 60 at 5,459. The NASDAQ up 176 points at 17,358. The yield in the 10-year note now at 4.20%. Gold getting a pop of $32.20 at $2,385 and change. Silver down this week, up 9 cents today, though, at $28.07 an ounce. The price of oil taking a tumble this week, down nearly $2 at $76.44 a barrel to close out the week. The volatility index, the Wall Street Fear Index, the VIX Index down more than $2 today, back to 1639. 3M, the star of the day. Looks like those little Post-it notes are selling good, and looks like they're actually having their best day ever, 3M, and upbeat outlook under a new CEO of that company. 3M stock closed up nearly $24 today at $127.16. Looks like Mohawk Industries, that's the flooring products manufacturer and lacquer product maker. They make spray paint and that sort of thing, moving up more than $26 today at $160 and change. This on its latest earnings report and corporate restructuring plan. Tesla pulling into reverse today, down 45 cents, back to $219.84. It had a very rough week, having its worst day since the 2008 financial crisis yesterday, rebounding just 3 cents today, back to $11.19. Checking the cryptos now, Bitcoin having a big day today, up about $2,100, right now just below $68,000. Ethereum of $29 to $32.83. This is the week that the Ethereum ETFs kicked in, and Doge at the moment at 13 cents. Apple at 47 cents at 217 and change. The magnificent one, NVIDIA, rebounding today at 78 cents at 113.06. Airlines having a mixed performance this week. Delta Airlines still rebounding from that IT meltdown about a week ago. Delta shares up today 66 cents higher to 44.13 as they try to find people's luggage. And Southwest Airlines, which made a big policy announcement change, that there'll be no more open seating on Southwest flights. There'll be assigned seating now. The stock pulling back today to $27.23 a share. Mottek On Money continues here in 790 KBC. Governor Newsom making news this week on his announcement that he wants to remove homeless encampments across California after a U.S. Supreme Court decision allowing cities to enforce no camping laws. One thing missing about this equation here, though, is where are the homeless going to go once they're cleared away from these encampments? Looks like the order says state agencies should reach out to local organizations and request services for people displaced from camps, but it does not require a state agency to find them housing. In Los Angeles, Mayor Bass opposed the Supreme Court ruling last month, also was critical of Newsom's new order. Joining us live now is Soledad URSUA, Venice Neighborhood Council board member. Venice, of course, that beautiful neighborhood along the coast here in the Los Angeles area, hard hit by homelessness as well as crime. Soledad, thank you very much for joining us live here this afternoon.
Hi, thank you so much for having me.
Yeah, so give us your reaction to the governor's announcement, and in practical terms, what do you think it will mean there in the Venice area?
Well, this executive order comes shortly after the Supreme Court just overturned the Ninth Circuit Court of Appeals, which previously restricted government's authority to enforce laws. So, and this is something that Newsom was really hoping would happen. Luckily, we have a more conservative Supreme Court that, sided with common sense. Of course, localities, municipalities have the right to enforce their own laws. So what he then did was put out this executive order, and I read through it today. It is only limited to state property. He's also not directing any funding, any resources, which makes it voluntary. So he is calling on all agencies that are not under his authority, mainly municipalities and other county governments, to adopt policies that are consistent with his executive order. So this may just be seen as something that, we are coming up on an election season. It may be something where he's trying to save face, but more than likely, this is another executive action by Newsom that does not have any teeth. There's no timeline. There's no specifics. So this is something where he can posture and say that he did the right thing for California, but is now placing blame on the municipalities to take further action.
And others who've read this say it was a PR stunt. And so what other state lands are in Venice, for example, where encampments will be cleared?
It does not give any. State property, this is mostly along Caltrans, the freeways. You may remember that in Los Angeles, we had a very embarrassing freeway fire where a homeless encampment went up in flames. Newsom, said that there was an arsonist. We never found that arsonist. But what you see going on here is, we see that you can move homeless encampments. When President Xi from China came to San Francisco last November, they moved the homeless encampments and they came right back. California has always done this for high-level events such as the Oscars and the Super Bowl. But what might be happening here is homelessness is not just a threat to Newsom's political aspirations, it's a threat to the entire Democratic Party. Because what's happening today is our Vice President, Kamala Harris, is running for president. She will be labeled a California liberal, which means that there will be much focus on California and its homeless crisis. So this is a huge liability, and perhaps the state is getting ready to possibly clear some of these encampments to make way for November, so that the stigma of failed progressive policy is sort of out of voters' minds.
It should also be noted we had that homeless count here in Los Angeles recently showing
Every week, Michael Rosenbaum is getting deep with someone new on the Inside of You podcast.
Let's get inside of Kevin Smith.
I can go to a movie and enjoy it, and I'm never like, I could have done that better.
Really?
Never. I started as a fan. I'll finish as a fan. And the difference between this iteration of Kevin Smith at age 53 and the one that most people met at the beginning of my career, back then I would have told you all the movies that I hate and here are the reasons why they suck. And you would never hear that from me today.
Inside of You with Michael Rosenbaum, wherever you listen.
drop that was trumpeted by some headlines and papers. That drop, in obviously not a very exact count, was approximately 200, which still left the homeless population based on the count by LASA, the Homeless Services Organization, still up above 75,000, at or near all-time highs. Do you see homelessness decreasing there in the Venice area?
And most people who live here will say there is no decrease. What's happening in Los Angeles is elected officials are taking a victory lap for something like a 2% reduction in homelessness. That's really a drop in the bucket.
0.2%.
And yes, 0.2%. So that's a drop in the bucket. It's not even worth the margin of error. But when you just look at what's happening in California, just in its entirety, the state of California has less than 12% of the total U.S. population, but they have more than 30% of the nation's homeless population. So there's 180,000 homeless living in California. And the reason, we have a beautiful year-long temperate climate, but also we have complete lawlessness in California. It is legal to do drugs such as meth and heroin on the streets. You will not end up in jail. So what we've done is this perfect storm of, great year-round climate and just complete lawlessness has really attracted the entire nation's drug addicts to live on our streets. And so, there may be talk of moving these encampments. There's really nothing that's being done to fix the underlying or the root issues here, which would largely be overturning Prop 47. Again, something that was pushed by all of these progressive leaders and, pushed onto the people.
Venice is an affluent neighborhood and certainly had seen a renaissance in recent years. It's heartbreaking to see what's going on there in a beautiful coastal area with the crime and homelessness and very serious crime recently.
And every week you're hearing about more and more horrific attacks. What's happening right now, it's summer. It's very nice out. So what we're seeing is that, when they did the homeless count back in January, they do it on the coldest day of the year. It's very raining, so people are more likely to go into shelter. It's easy to get people to go into shelter when it's raining out. But now the weather is back and people have reclaimed the beaches. I saw today that an elderly man in Whittier was just having lunch and he's punched in the face by a violent transient homeless person. So these sort of attacks, unprovoked attacks by mentally ill people, transients from out of state with long criminal records, these will continue to happen because there's just really no laws to enforce any of this. And, the advocates say that this is going to recriminalize the homeless and it's cruel and unusual punishment that we need to let people lie, sit, or sleep on public property when they have nowhere to go. But the people who live here, we know that there's no sleeping or laying going on. What we see is homeless people engaging in open drug use. They're building 2-story structures. There's sex work, prostitution. There's camping fires, which are very dangerous. So the advocates say that, these poor people just want somewhere to sleep. I mean, by all means, take a nap, but you don't have the right to go and break all of these laws. And so that's really the big discrepancy here. And Newsom will never take on the liberal advocates such as the ACLU. So I'm not sure what we will really see come from this other than just grandstanding for political aspirations.
Maybe you can give us an update on something we've talked about in the past, and that is the RVs and the so-called van lords. Some of these vans and RVs are being rented, right, to the homeless, and they're just parked there forever, destroying businesses and residential neighborhoods. What's happening on that front?
There really has been no relief on that. As of right now in Los Angeles, there is no municipal code on the books to move out the RVs. Prior to COVID, you could only park an RV in certain areas. You were not able to park them in residential areas. But many of our municipal codes were suspended during COVID so that we could stop the spread of COVID. Obviously, that didn't happen. So what we're left with is just a huge mess. Even post-COVID, we have not returned to many of the laws in our books, and many of them have actually sunset and expired. So we're just living in this completely lawless state. And, you kind of see the free market taking over here where you have these van lords, right? They're renting out RVs. And so you can rent one from, $500, $1,100 a month. That's a great deal. So the renters are living, in probably some of the most expensive or most desirable neighborhoods, right, here by the beach. And they're dumping their waste directly into the storm drains, which go directly out into the oceans. It's just complete chaos here. And, sadly, Los Angeles is so strict when they go after residents, homeowners, business owners for any sort of code violation. But it turns out that you can't cite anybody who's doing something illegal because there's no law on the books. So it's just completely, upside down here.
And are your concerns falling on deaf ears when it comes to the city leadership in that area?
Yeah, I mean, you don't see much action. What we just see is that, even Mayor Bass, County Supervisor Lindsay Horvath, the progressive supervisor, they are saying they do not agree with Newsom's order. They keep going back to that this is going to criminalize the homeless. They say you can't arrest your way out of homelessness. But they are still using this outdated narrative that the homeless people on our streets are these poor, unfortunate souls who have lost their jobs. They're suffering from hard times. They keep negating their reality deniers. They do not want to admit the criminal element, the drug addiction, the mental illnessness. So they're just living in this complete other, world. And perhaps Newsom sees this. He's probably very frustrated. This is probably going to hurt any sort of political aspirations. But, it's also something that he helped create. So now it's become a real problem for him. So we'll see if he can get anything cleaned up or if he can get the encampments moved before the November elections.
Soledad URSUA, Venice Neighborhood Council board member. Soledad, thank you very much for joining us live here this afternoon.
Thank you.
Mottek On Money continues here, 790 KBC. Good afternoon. That cool breeze you feel out there once in a while could be the winds of change in real estate. Big drop in real estate sales noted here in Southern California. Let's talk about what's going on now at the ground level with Jonathan Lansner, veteran business columnist at the Orange County Register. Jonathan Lansner, thank you very much for coming to the line this afternoon.
My pleasure, Frank.
Wonderful to have you with us. I see in your latest column on real estate, you noted a pretty steep decline in sales. Take it from the top and tell us about that report.
Well, the California Association of Realtors for June reported that sales ran at a 270,000 home a year pace, and this is the 21st month below 300,000. What's interesting about that their at least published records go back to 1990. We've never had a streak of sales this slow in that period, and even in the depths of the Great Recession in 2008, we only had 10 months below this sales pace. And people say, well, why do we care? Well, it tells you that next to nobody is buying a home, and you can ask why. And clearly one of the reasons is that we have a median home price in the state of $900,000. And even by the realtor's own numbers, only 17% of us can afford that kind of house payment. So we can see we have incredibly unaffordable housing. And people are reacting perhaps so you think they would. They're just not buying it. And, it's a little bit of a chicken or egg type of situation. We have high prices and no sales, and what gives first? Since 2018-19, that was the good old days before we had all this COVID and pandemic economic turmoil. Since that period, home prices in California have essentially doubled. Half of that is cheaper mortgage rates, and half of that is, home appreciation. So if we somehow, and I don't think anyone's predicting, went back to the mortgage rates of 2018-19, which below 5%, most of that period was in the fours. Even that would still leave home prices up 50% over that period, and incomes in California are up about 25% in that period. So at some point, something has to give, and so far in this cycle, whether you call it a crumble, a collapse, a crash, what the housing market has done is all but somewhat stopped with sales. So next to nobody, and I know 270,000 homes is a lot, but relatively speaking, no one is buying homes because no one can afford them.
On the live with Jonathan Lansner, business columnist at the Orange County Register. Indeed, collapse, crumble, or crash is the headline on your latest column, which people can check out, Jonathan, which is an excellent assessment, as you just shared with us here. So affordability and certainly availability continue to be the big issues here in Southern California. Any cracks in the sale prices here? You mentioned the sales are down, but the prices are still holding up here, right?
Right. There's a couple of other indicators, some on a national level, some somewhat local. But what we've seen is that lenders are now making loans with much higher loan-to-value ratios than they have in the past. And that's one way. It's the lenders are getting the handful of people into the deals who are buying. We've seen a lot more investors. We're probably in the 20% range versus historically we've run 10%. And investors usually bring a lot of money, if not full cash deals. And basically and I hate anecdotes for a lot of this stuff, but you hear from a lot of people in the business that a lot of the people who are buying have a wealthy relative along for the ride, usually gifting the down payment. Because just remember, on a $900,000 home, if you want to put 20% down, and not a lot of people do, but if you do, that's $180,000. That's not the type of cash that people have stored in their savings account in 2024. So, at this point, it's one of those what gives first. And, maybe the Fed later this year will help lower rates. Mortgage rates are down in the 6s. They were in the 7s, but that's probably not enough. And we have seen some reports from the people who watch the listings that the listing prices are at least flat. So the homes that are on the market are priced about where today's market is, and many of them have price cuts on them because people thought, well, everyone's gotten a price hike the last couple of years. I'll take one more. And we're sort of seeing that the buyers are saying, no, I'm not going to pay more. These things tend to move slow. It's not like the stock market where if it has good news or bad news, it's up big or down big. So I think it's a wait and see. But considering the second half of the year is typically the slow period for house hunting, and prices do tend to soften later in the year, I would expect it wouldn't be a surprise if we see some drop in home prices. And really the thing to watch is that enough to get people off the couch, so to speak, and into a sales office and closing on sales, because we'd like to have more people own homes in this state, because home ownership's pretty good for society.
Jonathan Lanser, veteran business columnist at the Orange County Register. Great to have you back with us here, Jonathan. Thank you very much for taking the call here this afternoon.
All right. My pleasure. Have a good weekend.
You too. You too. Thank you very much. And be sure to check out his latest column. The headline on that one is Collapse, Crumble, or Crash, talking about Southern California real estate in the latest sales report. This is Mottek On Money on 790 KBC. The week ended with a rally on Wall Street. The Dow was up about 800 for a while today. Closed up 654. The S&P 500 up 60, and the NASDAQ gained 176. Stay tuned now for the 790 KBC News Blitz with Randy Wang. This is Mottek On Money on 790 KBC.
It's kickoff time, and Believe podcasts are here to get you ready for the season.
This team, they looked to figure it out, and they said, okay, we got a shot at this thing.
With Believe, you get immediate reactions, game previews, and expert analysis from all 32 teams, plus all of your favorite college teams.
This is a true junior that we're talking about.
Sideline to sideline, end zone to end zone.
The running was good. His size is unbelievable.
Just search Believe. That's BLEAV podcast, wherever you listen.